What's up, forex traders? How are you doing? Welcome back inside of my screen to yet another weekly review, and in this particular video I'll be showing you how to catch 100 plus pips moves using CRT, which is candle range theory, and the pioneer of this strategy is Romeo. The guy did absolutely justice to this trading strategy. So every concept I'm going to be discussing here is pioneered by him, and it's the author of CRT and Totuso. So moving on. Last week on EURUSD, I was looking for lower prices. Prior to this particular weekly review, my previous weekly review videos, I was looking for higher prices on GBP USD, and if you watch those videos and fast forward to date, you can see that those targets has been met on the previous videos, hence why I'm looking for lower prices on this particular weekly review on EURUSD. So moving on, as a trader, you need to have a trading plan. You want to have a trading plan even before going to the lower time frame to look for executions. You want to have a solid plan on the higher time frame. So let's look at this analogy. If you're a soldier and you've been assigned to a battlefield, are you going to tell yourself that you're going to deploy at that battlefield without any weapon? No, you're not going to do that. So you want to deploy on that battlefield heavily armed so you can have a chance to fight against your enemies. Same thing with trading. You want to have a solid plan, and that plan should be on your higher time frame first before going to the lower time frame. Please, I cannot overemphasize on that. You need to have a solid plan on the higher time frame before going to the lower time frame. So if you stick with me to the very end of this video, I'll be revealing tips and tricks on how to catch 100 plus pips move using CRT, time, and Totuso. So last week on EURUSD, I was looking for lower prices. Why? Because price did the criteria I was looking for. That was why I was looking for lower prices on EURUSD. So personally, I'm a weekly range trader, gradually building myself up to be a monthly range trader, because the higher the better. It gives you flexibility, it gives you less screen time and all the rest. So moving on, you can see here on the monthly time frame, price respecting these old monthly highs into a key level, which is the fair value gap, and we are having a potential CRT range, which is this last month's bullish candle you're seeing here, which is August. So moving on, there are questions I like to ask myself when I'm looking for a trade idea. These three questions are my foundation. My trading is being simplified to these three questions. So once I'm able to answer these three questions, then I will have clarity on the lower time frame. Then I'll be able to catch 100 plus pip moves if these criteria have been met. So moving on. So last week on EURUSD, I was looking for lower prices. Why? Because prices respecting old highs into key level. That alone is giving me confirmation that okay, this last week that just ended, I should be looking for lower prices, and also seeing this potential monthly CRT range. So moving to the weekly, you can see here on the weekly prices denote respecting these old highs, and also we were trapped inside of this weekly range for 1, 2, 3, 4, 5 weeks. Then the sixth week actually exceeded the high a little bit and closed back inside. Then this particular week was FOMC week, and price leaders took out these old highs, which is a key level, and it is an important key level as well. Took out the old weekly highs into the monthly fair value gap and rejected. So that alone is telling me that, okay, this particular week I should be looking forwards lower prices. So like I said, if you stick with me to the very end of this video, I'll be explaining tips and tricks on how to cash 100 plus pip moves using CRT and time and 32. But just hold on a little bit, let me walk you through the trade and how I took it and the reason why I took it. So seeing this rejection prior to this week that closes, I was looking for lower prices. Seeing this rejection prior to this week that closes, I was looking for lower prices. Now, on the lower time frame, this rejection here, you're seeing this long wick, you're seeing here on the lower time frame, you will see candles representing this week. So those inside those candles, you can find order block to look for selling opportunities to the downside. So on the daily, you can see here on the daily how price leaders respected these old highs on the daily charts, this long-term old highs on the daily charts. After price took it out, then the next candle did what? Took out the previous candle high and closed back inside, and henceforth we are seeing lower prices until we closed below this particular candle that took out this liquidity, making this candle an order block. So I was looking for lower prices at the 50% of the range, and you can see how price leaders came to the 50% of the range and sold, like price dumped off of the 50% of the order block. So moving to the 4 hour, you see here on the 4 hourly, now these vertical lines represents the opening price of the opening time of the weekly range. So last week this was the opening time of the weekly range, and this is the closing time of the weekly range. So you can see how price did what? Respected the 50% of the daily order block, and after taking out this particular high, I was actually watching for price to take this high, but it didn't. Instead we took this one, and immediately price closed below this candle that took out the liquidity. I was looking for bearish prices, and my execution was there somewhere around here, and you can see how price dumped to my first level target, which is this old low, the second level target, which is this old low here, and all was delivered. Everything was delivered. So, and my entries were on the hourly. You can see on the hourly how price is respecting what's old highs and breaking and closing below the lows, and you can see how price came into this particular key level on the hourly time frame, and also the 50% of the daily order block. You can see how price respected it, and we dumped off of that key level. So my entry were on this 1 hour order block here. This was my entry. Alright, that was my entry on this particular trade. This was my entry and the stop loss, and you can see how price delivered to the target. So now let me show you the tips and tricks on how I got to this particular trade idea. So I was just walking you through the whole trade, and without explaining how I got this particular beautiful trade. So let me show you the tips and trick on how I got this beautiful trade. So first thing first, you want to do what? Start your analysis from the higher time frame. Now on this higher time frame, you want to ask yourself 3 important questions. Like I said, my trading is being simplified to these 3 questions. So if you're a CRT trader, if you're trading with the strategy using CRT, you want to ask yourself these 3 questions. Question number 1 will be what is the DOL? DOL is simply draw on liquidity. So what is draw on liquidity? That's question number 1. So once you answer this particular question, what is the draw on liquidity? Draw on liquidity is simply where is price drawing to. Are we drawing to the lows, or we're drawing to the highs, or price is trying to fill up a fair value gap? So once you answer these questions, and preferably you want to answer the question on the higher time frame, weekly, monthly, 3 months, 6 months, and sometimes the daily chart. So now on this monthly chart, I can see that price was drawing to this fair value gap priorly, and after we hit the fair value gap, you can see the rejections, and now we are pointing lower. So price on the monthly time frame is drawing towards this monthly low, this old monthly low, and also the 50% of this range high, range low. If we go to the lower time frame, you'll see that this is a range high and this is a range low. So the drawn liquidity is what? Old lows, and 50% of the range. So that's the first question. Question number 2 is, what are we respecting? What are we respecting? Now, this question number 2 is where your bias and narrative lies. As a CRT trader, question number 2 that I'm asking myself is where my bias and narrative lies. So if I ask myself, what are we respecting? I'm simply referring to, are we respecting old highs, or we are respecting old lows? Are we respecting premium key levels, or we are respecting discount key level? And you can see here on the EURUSD charts, price is doing what? Respecting old highs into a premium key level, which is a fair value gap. So price is what? Price is respecting old highs and premium price is respecting old highs and premium key level. So excuse me. So once this second question is answered, the next question you want to ask yourself is, question number 3 is, what is the key level that is likely to be used? So what is the key level? This is the key level that is likely to be used. So that's question number 3, which is the 3rd tips and tricks on how to catch 100 plus pips trade using CRT strategy. So this question number 3 is, what is the key level that is likely to be used? So you can see that price is respecting this fair value gap and also these old highs. So on the monthly, key level is monthly minus FVG and old highs. So once you're able to answer these three questions on the higher time frame, then and only then we can now go to the lower time frame to frame a trade idea using these three questions you've answered as your foundation. So you can see this is a key level, which is the monthly fair value gap. This is the old high, which is the key level. Now the drawn liquidity is 50% of this range high, range low. If you go to the lower time frame, you'll see it. And also price is respecting what this old highs. So if we make this visible on the weekly charts, and if we go to the weekly time frame, you will see here drag these things to the left, from the left to bring it to the right. You can see here on the weekly charts, let's zoom in pretty nicely on the weekly charts. Alright, let's keep it here. So now on the weekly charts, now what do we have on the weekly chart? So prior to this week, I was looking for lower prices. Now I know that on the monthly time frame, my drawn liquidity is what old lows. Now you can see on the weekly chart we have old lows, old weekly lows here, previous week lows and old lows here, and 50% of the range. Now you can see this 50% here, you're seeing this 50% here is this range high to this range low as my drawn liquidity. Now what are we respecting, which is my bias and narrative? Price is respecting old highs and premium key levels. So now you can see this is the old high on the weekly chart and price is respecting it, and we are also in a premium price on the monthly charts. We are in a premium price and we are respecting premium key level. So now on this particular weekly chart, you still want to look for a key level that this new week is going to use to push price lower to your draw on liquidity. So before this weekly chart open, on the key level I was looking at is this rejection block, this long wick here, and this long wick on the lower time frame, daily and 4 hours, you will see candlesticks representing this long wick. So the key level was this rejection block here. So now on the weekly chart, I've also answered these three questions, and I have also explained to myself these three questions on the weekly charts. So moving to the daily. Now on the daily, the same thing applies. The same thing applies on the daily. Now you can see on the daily charts, the drawn liquidity is what old lows and 50% of the range. You can see on the daily chart we have this is old low, this is old low. Remember that long weekly rejection you're seeing on the weekly chart. You can see that on the daily time frame you're seeing candlestick representing it. So what are we respecting? Again, price is respecting old highs and premium key levels. Now this is what old highs, and also this high is in a premium price on the monthly chart, and price is respecting this. So question number 3, what is the key level that is likely to be used? Now on the monthly we have fair value gap on the old highs, but on daily you can see here after price took out this high with this particular candle, once we close below this candle, you can see this dotted line price closed below it. Yeah, this candle now becomes like, this particular candle now becomes an order block. Why? Because it is a tick or close candle that took out liquidity and we've closed below it. So since it's a very big range that is representing the order block, and we didn't close, like we didn't dumped aggressively below it, we can make reference to the 50% of the range as the sensitive points where price will respect, and the rejection block, which is here. So the key level on this particular time frame was the 50% of the order block, and also you can see here we have a balanced price range, which is these two fair value gaps. Let me zoom in so you see. So these two key levels, these two fair value gaps, this is a gap here and this is a gap here. You can see how price did those. Came to the balanced price range, and we stall around there a little bit and we decline. So on the daily time frame, the key levels are the 50% of the order block and the balanced price range. So you can see that the same phenomenon is repeating himself. I'm always asking myself these three questions on the higher time frame, from daily and above. I'm always asking myself these three questions. So if I have a clear answers to these three questions, then I can do it. Frame a trade idea on the 4 hour, 1 hour, 15 minutes towards these questions. Like on the hourly time frame, on the 4 hours and the 1 hour and the 15 minutes, I can frame a trade idea in alignment with these questions. So now on the hourly, let's go to the hourly. If we zoom out pretty nicely and bring the questions from the higher time frame, so you can now see how I got this beautiful trade using time and turtle soup. You can now see how I got this beautiful trade. So you can see here on the hourly, prices do not respecting old highs. The same thing from the monthly, we've been respecting highs and breaking lows. You can see the drawn liquidity are old lows. You can see price constantly drawing to the old lows, and the 50% of the range, which is this is the 50% of the range. Then question number 2, what are we respecting? Price is respecting old highs and premium key level. You can see how we are respecting the highs. Then question number 3, what is the key level price is likely to use? You can see daily, the 50% of the daily range, the daily order block rather. You can see price respecting it here, and also this hourly balanced price range, which is the fair value gaps that are overlapping themselves. You can see price respecting it. So the entry was around here using time and turtle soup. Immediately price took out this high, and in London section Wednesday, price came back to the order block that took out this high, and we displaced straight towards the trade objective. And let me show you something on my Telegram. Now this is my journal on my Telegram, and this is how I planned the trade beforehand. This was the monthly charts and what I was looking for. Moving on, this was the weekly charts prior to the trade, what I was looking for. This is the 4 hourly charts prior to last week that closed, what I was looking for. This is the daily charts, what I was looking for and what I was expecting from price. You can see how I marked out a balanced price range, and I was looking for price to come there before I would do anything, and this was my target. You can see the eye there. Then on the hourly, you can see I was looking at this balanced price range on the hourly for price to come back into there and drop, and this was the outcome and how price delivered to those targets I was looking for. And also here is the execution, and you can see how price delivered beautifully. Like, the delivery was clean and beautiful. So going back to the charts, so that is how I was able to get this trade, and those are the tips and tricks I promised to show you guys at the start of the video. So thank you for watching this weekly review, and I hope you've learned something from this particular weekly review. And also, please like, subscribe and share. And if you need a 1v1 section, you can also hit me in my DM. Just send me a DM to my Telegram handle at trader942. Let me show you the handle so you can, yeah, this is the handle, trader942. Just send me a DM here for a 1v1 section. So thank you for staying to the very end of this video. Good luck and good trading.